happy Friday. We're gonna give it a couple more minutes to let people trickle in, and then I can kind of kick things off. Nate, haven't seen you in a minute. How are you doing?
Battling, my friend, just battling.
Yeah, who are you battling? What are you battling?
State of Indiana just is going to pass a law that says that hospitals can't charge more than 265% of Medicare.
Okay, I just saw that. That's pretty recent, right? Or it's
Yeah.
been making its way through.
Yeah, so I'm writing an op-ed piece and knuckleheads. So
I Hal Andrews over at Trilliant has been writing about that a little bit too. Do you know him at all? Have you?
I do. Well, I know Trilliant because Quinn Studer's on the board. So
Okay,
yeah.
nice. Hey Dan, how are you doing? Good to see you again.
Well, Blake, how are you?
I'm doing great. I'm happy it's Friday. It's been a week for me.
Oh, for sure. I know
Um,
the feeling. And Hal over Trillion's great. He's 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 awesome.
yeah, he's a character. I enjoy his newsletter and the research they put together. Um, we're friendly. We've done some things in the past. And Kristen, have you joined one of these before? Hello, how are you? Do you
Hi,
want to?
good. How are you?
I'm good. Do you want to give a little quick intro?
Yeah, sure. I'm Kristen. Live in Florida. It's full on summer here. I work for Incenna. We're a health tech consulting firm, focused mostly on helping digital health companies go on their go-to-market strategy and PR. And so constantly trying to figure out what's happening in the market.
Cool. Well, welcome. Glad you're here. And then
Right.
Jeff, I recognize your name from Twitter. I don't think have we ever actually formally met?
No, I don't think so. I think
Well,
we talked about golf and other stuff on golf and healthcare on Twitter.
that's right.
That's right.
That's right. Do you want to give a brief intro as well?
Yeah, sure. Hey guys, my name is Jeff Matus. I live in Connecticut, and I'm a huge UConn basketball fan. So a lot of UConn basketball stuff in my background, or you'll often see me wearing a shirt. Didn't have as much to brag about this year as we did the last couple of years. Um, Professionally, my focus right now is on a company called Conduce Health, where we're building a new way to think about specialty care referrals for risk-bearing primary care organizations and health systems. Um, Before that, spent about 7 years in a virtual care delivery space with a company called Welllinks that we built, and a bunch of med tech commercial work before that. I also recently joined the board of directors of our state's academic medical center health system, UConn Health, and that's really the main reason I joined Hospitalogy is that component, as I am dipping my toes into the hospital system strategy space for the first time, and excited to meet and network with new folks. Thanks for having me.
Hey Jeff, if you ever need anything from Hartford Healthcare, I spend about a third of my day every day working on with Hartford. So
Oh,
Jeff,
awesome.
Jeff Flash,
So
close friend.
yeah, and the co-founder of Conduce, Eric Rosso, is on the Hartford Healthcare board of directors. So he and I have funny conversations, never disclosing anything we learn inside the boardroom.
Yeah,
Great system Hartford is.
yeah, it is. He's done a good job.
Small world. That's awesome. Well, yeah, thanks Jeff for coming on and Kristen, both of y'all. Just a quick kind of, how this roundtable works is it's really just like an open collaborative discussion. I put forward just like out an agenda about, stuff that's happened in healthcare and in the world and, talk about it. I can talk the whole time. If folks have things to say, I would appreciate and welcome that as well. Any hot takes or just things you guys are seeing or things you want to learn more about, all of that, it helps me and is great conversation. So that's kind of like the format. So really, really loose and just, collaborative. John, I also see, is that a sling I see on your arm over there? What happens?
Thanks. Rotator cuff surgery.
Oh no. Is recovery going well?
Recovery's going well.
That's good. I
I'm
I went
I'm
to
I'm a pro at this. This is my third one in 16 months. So
geez.
third
That's
time
tough.
arm is what I'm going with.
So funny. So I went to Pinehurst with a bunch of my dad and his friends who are all kind of around mid 60s, and they were all kind of talking about, when you get to that age, it's like those joints, and especially when you're golfing, like you're gonna need to have some procedures done. And I'm like, gosh, I'm gonna start doing some yoga now or something. I don't know. Yeah. Anyway.
Yep.
Well, anyway, I hope recovery goes well. And then Denver, I see you. Good to see you again. How are you doing?
All right, Blake. It's a busy time of year for us. So
I can imagine. And then Drew, always good to see you. Always a pleasure. How are you doing?
Doing well. Trying to get everything all set up for the weekend and all that type of stuff. So yeah, no, we're doing well. Doing well.
Sweet.
Yeah.
Yeah. Good to hear. Easter weekend, big one for the family.
Yeah.
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 It might rain in Dallas, so I'm very the Easter egg hunt might get canceled, which is such a bummer. Anyway.
Yeah.
Why don't we dive right into it? I'm gonna share my screen. Can y'all see that? The agenda and all? Okay. Cool. Yeah, so I think the big one that's like very top of mind today, as far as healthcare is concerned, is all of this hubbub that's come out around, Medicare Advantage, and the carriers very recently. I think, was it today or yesterday? United Health Group reported their earnings, and I think it might have been the first time they've missed their like kind of estimates in like ever, maybe like in like a decade or something, just absolutely insane. So that's kind of an insane signal. Kind of like,
Yeah.
yeah, go for it.
The first time that it's the it's the first time they've taken down full year guidance. Like, so even, I mean, the miss in and of itself, but I mean, they took down guidance by 10%, for full year in the first quarter. And I don't think I've ever seen them, they have so much visibility, with all the data and stuff like that. So, yeah, pretty big. So
You can
Yeah,
only,
and
you can only cheat so long.
I think it's I think what it'll be interesting to see, when CVS and when Humana reports, I think they could only stay away from the 10 to 15% of Medicare Advantage patients that are uneconomic to cover. And historically, they've been able to avoid that population and their membership. And with the market exits, with Humana and all that type of stuff, that unintentionally that new membership flowed to United, and it took down the profitability of their entire MA book. That 10 to 15%. I mean, it's crazy to think, but it's not entirely unique. I've seen things, within the health system that, you have the 15% of this particular population that's really, really, really difficult to provide care for economically. And, it's, and it takes down, the profitability of, the entire thing. So, man, that feels like what has occurred here. But we won't know until CVS and Humana report.
Yeah, and great points, Drew. Because it's very interesting. We were talking about CVS last year and how they, really did very poorly, and it kind of might turn out to be a blessing in disguise. They shed all this stuff, and now they're kind of resetting. So yeah, we will see. But I was just parsing through the earnings call a little bit this morning, and they mentioned a couple things which are pretty interesting. So the first thing they mentioned, and kind of just like more detail on your points, Drew, is they expected, I think, a certain level of utilization increase from the prior year, kind of similar to 2024 trends, and it ended up being double that. So that was kind of like the first hit. And then the second hit was, they added a bunch of Medicare members to Optum, and these are these kind of costly patients, consumers who are not engaged, and they were, just hit profitability essentially. And then finally, it's just which doesn't seem like United, but they talked a little bit. And I'm only through the first few paragraphs, so I haven't read the whole thing or the questions or anything. But they talked about the V28 changes too, which you would think they would kind of have had a plan for that at this point, but I guess not. So they're doing a bunch of stuff around, engagement and trying to mitigate the risk adjustment changes and all sorts of things. But
Yep.
Overall, very strong signal for United. And to your point, Drew, about those members, is it a contained effect or is it sector wide or those sorts of things? I guess we'll see.
I'm gonna guess they're not gonna make that mistake twice.
Yeah.
The markets that Humana and Aetna, and to a lesser extent, Elevance, exited, and those members flowed to United. They're not going to let that happen again. They'll exit as well, which is sad and it's unfortunate. What do they say? Did they say the path to ruin, is paved with good intentions? But it's when you have such a concentrated, group that has such an amplified effect on the entirety that it makes more economic sense to just pull out. And I mean,
which begs the question, like for those, like is Medicare Advantage like failing these members, or like where did those people fit in the system? I just like what's the answer there?
So if you look at Medicare Advantage around the country, last year, 95% of the profits were generated by United Healthcare.
Wow.
So, yeah. And that was a function of RAF scores, rebates, denials, delays, etc. And you can only hide from that for so long. So, what's happening is two things are happening from my perspective. Drew, you may disagree, but the network adequacy has become an issue. More and more people are dropping out because they're paying 15% less than Medicare, and the docs don't need it, and the hospitals don't need it, and they're getting the RAF scoring and the other things. I don't know if you saw the research. $33 billion was attributed to excess. I wouldn't call it fraudulent, but excess RAF scoring compared to traditional Medicare. So the combination of those two things, those are problems.
Yeah. Man, I think I agree. I mean, I think that the other thing that gets lost in, when this is, I mean, United, similar to HCA, is deep in the markets that are profitable to be deep in. They're deep in Florida. They're deep in California. They're deep in Texas. It's those type and when you have depth there, I mean, that's where the profits are. And it's in the other markets where you get hit. The biggest, the smoking gun for me when going over, and I've only done a cursory glance, is 89% of the miss was attributed to new members.
Wow.
And of those were members that were prior, United. I mean, Humana. See, I mean that's it doesn't get discussed a lot, but what is United really, really, really good at? They're really good at identifying the profitable parts of a specific business and, doubling down and mitigating wherever they mitigate. I mean, there's a significant patient selection bias or customer selection bias in this space. So,
Wasn't that why they acquired Change Healthcare, to try to avoid those patients?
Yeah.
About data?
Yeah. I think they were, I mean, I think, if you have to go back, I mean, and, we all can Monday morning quarterback. I think they way underestimated how big of a pullback Humana and CVS would undertake in the back half of 24, where they just left markets and, just pulled up overnight. And the network adequacy part, that Nate is that they were left holding the bait, and just, they probably had visibility into it, but they just had they were they were pricing for margin, and they had record member growth.
Yeah.
Yeah.
That's crazy. And then double the utilization. I mean, I think about, on the provider side, that kind of signals an increased elevation of utilization environment in that outpatient and Medicare space, right? Is that what you're planning for, Drew? Nate, have you guys heard anything on that front or seen anything?
I think drugs are really having a big impact as well as outpatient, but it's also, I mean, it's everything. These patients get sick eventually. Somebody's got to take care of them.
Yeah.
By the way, just as an aside, if you ever want to Google something interesting, Google Glaxo's Hall of Shame. It's our friend Mr. Whitty, while he was in charge of Glaxo, had a $3 billion whistleblower case involving criminal charges, a $750 million payment for another case in Puerto Rico, and a $500 million fine for bribery in China, among other things.
Oh, geez.
Yeah, so he's kind of an interesting guy.
Yeah. I mean, to the drug part, and to the infusions, or it's a lot of that care and a lot of that utilization and, drug dispense and drug administration has left the hospital, but it hasn't left the system, and it's showing up in the outpatient. So I don't know how an actual, I'm not an actual, I don't pretend to be an expert there, but this care and this utilization isn't leaving. It's just going somewhere else.
So I'll shut up in a second, but I'll tell you one quick story about my son. He loves me to talk about his irritable bowel problem, but he was with Aetna commercial, and the drug medication he took was $5 copayment per month. The system he works for switched from Aetna to now Anthem or Elevance. That exact same drug is now costing $330 per month.
Yeah.
And so
I'm sure it's one of the Crohn's. One of the, why did Cardinal Health spend a 29 multiple on GI Alliance?
Yeah. And by the way, one of
Humira
stocks is his doc. But now what he did is he went to Mark Cuban, and Mark Cuban's charging him $20.
Yeah.
So, I mean, the whole point is that there's a huge markup in generics as well as in brand name that the PBMs are capturing. So it's kind of interesting.
Yeah. And the manufacturers want to be on the formularies, and, particularly to those GI drugs, on the biologic, you have the CVSs and stuff of the world that they're insourcing it. It's, why do people rob banks? Because that's where the money is. The money is in the drugs.
Not anymore, though.
Oh,
Oh, I'm on it. No, I'm just kidding.
I'm curious how that new law, I think it's in Alabama, maybe, that PBMs can't own pharmacies. I'm curious how that whole thing is going to shake out as well.
Yeah, it's a good segue into that, Kristen.
Thank you. I was like, it's an A state.
No, yeah, I was trying to remember too. I knew I had it on here somewhere, because that's very recent as well.
It is. I just read about it yesterday. I'm like on the drug topic. I think a lot about like what is that going to do for a lot of people say like PBM's time has come and gone. So it looks like state legislature is starting to sort of support that. So I'm interested to see what that like decoupling or whatever looks like over the coming year.
The payers will end up owning the infusion.
Just kind of like as a workaround, essentially.
Yeah. It's all about the channel. You're agnostic to what the channel is.
But and this is what I was kind of thinking of from like a bigger picture, like slippery slope perspective is like, what if, they talk about PBMs owning pharmacies, but, I feel like you could very easily extend that into like insurance companies owning providers in general, at the state level. So, um, I mean, you could probably argue that that's probably like a legitimate argument in court, right? Like, I think that you could get there pretty easily.
I mean, it's I used to work at a medical group that got bought by Optum, and Cigna and Anthem were shitting over it. I mean, they were petrified when we got acquired because they're like, "We know you're separate, but you're now part of United, and like, what does this mean?" And it causes a lot of angst in the market for sure.
Oh, really? Was there like what ultimately came of that, Kristen? Just out of
I mean,
curiosity.
we were the largest medical group in Southern California, so they didn't really have a choice. They had to work with us. They would have no network adequacy without us. But they started to share a lot less like inside knowledge and joint committee meetings and things like that because they just did not want anything to get back to United.
Mm.
Even though we didn't tell United anything, like we didn't have the connection point to them anyways, but they didn't care enough to like dig. But we lost a lot of like trust, I think, in them from being a medical group to like owned by the, behemoth of the United Health.
Yeah, that's interesting. I'm trying to think if there's like an interesting like anti-competitive implication there or anything, but I don't know, that's above my brain power right now. Yeah, okay. Well, that's really fascinating stuff. I mean, I think obviously Medicare Advantage is kind of has been the flavor of the month slash flavor of the year over the past couple years with utilization and stars and risk and everything in between. And I would like to bring to y'all's attention, we don't necessarily have to like dive deep into this right now, but I do think this, here, I'll pull it over, this Chartis report, just on Medicare Advantage. I shared it in the, where's my, oh, there's my chat. I'll put it in here. I shared it in a newsletter as well, but I think this is a really good overview of basically just everything kind of going on in Medicare Advantage. If you want a good kind of just lay of the land of both trends and, how has Advantage penetration and growth happened over the past year. It is still growing, but there's like a decelerating trend, so decelerating growth. Um, Lots of growth in kind of special needs plans and duals. But same dynamic. So 17% CAGR over the past 5 years, 10% last year. So still growing, still a great market, but deceleration of that growth. And then from there, it kind of gets into this report kind of gets into various segments. And so one thing I thought was interesting. Let me see if I can find it. Sorry, I'm scrolling through this kind of quickly. Yeah, so it has kind of the market share change here. You can see, you zoom in, enrollment growth, lots of negatives for Humana, CVS negative. And then this is an interesting table as far as just like tracking startup plan changes and who's doing what. Zing Health is a new, I think Duals plan. It's a new startup. It raised like a Series C last year or 2 years ago, and so it's seen like a ton of growth. So obviously, it's in full-on growth mode. And then you have all the other kind of um, standard names here, but funnily enough, all these names are 2% of the whole total market. So they've raised like who knows how many billions of dollars. Like I think Devoted was valued at 10 billion in its last like a Series C E or something, and it's growing at 3%, which to be fair, Medicare Advantage in general has seen some headwinds. So um, I think they probably have some financial valuation problems looming if they want to think about next raise or IPO or those sorts of things. And then finally, the provider-sponsored plan stuff was interesting. So over the past 5 years, just the growth, the market share of provider-sponsored plans, which includes all the health systems, et cetera, has dropped. So, we're really kind of seeing a waning of the provider-sponsored plan market. And along with that, something that was announced this week was Cone Health, which is now owned by Risant, which is the Kaiser's little transformation, whatever they're doing, vehicle for health systems. They've bought several. They've bought Geisinger and Cone. Risant purchased Novant's provider sponsored plan. I don't know anything about the scale of that or the financials behind that. I'm sure those will come out or are somewhere. But in general, it kind of speaks to the Drew. I would love for your commentary because there's been some stuff.
Novant and Cone have operated co-owned an MA plan for 5 years. I might have my time, but that feels to be about the time. And it's my understanding that Cone just bought out Novant out of the MA plan. Yeah. So I mean, it's not surprising. I mean, I think from both parties' perspective, that now you have, when you had now that you have Kaiser in the mix for both parties, you'd want to consolidate that. So, but yeah.
Yeah, it makes sense. Yeah, just an interesting move. And then you have like the Duca Novant thing too. So Novant's kind of active around your market, Drew.
Well, Duke Health's endowment is commingled with Duke University's endowment. And that's one of the 5 to 10 universities that is under watch from the current administration.
Mm.
So all of a sudden, you could have commingled Duke Health endowed funds, that instead of having a 0.78% tax, could have a 21% tax.
So
Wow.
Blake, if you look at provider-sponsored MA plans, I don't know if you all know this, but the government publishes P&L statements on many Medicare plans.
Oh,
So
that's right. You have that data.
yeah, so if you look at Centera, they lost $46 million on their MA plan in 2021, $52 million in 2023. Henry Ford, $85 million loss in 2021, $17 million loss in 2023. Spectrum Corwell made $14 million in 2021 and lost $118 million in 2023. I can go on, but the point is that these few provider-sponsored MA plans are actually generating any kind of income. Even Kaiser outside of California is having trouble. So if anybody wants to know a particular plan, I can look it up. So
yeah. The bigger one now is are the losses on the managed Medicaid for provider plans. I mean, that's been taken down. I mean, that eliminated like 75% of Centara's profit last year. UPMC took a huge hit on it too. I mean, so you have that as well. Obviously you have the MA, but the managed Medicaid's significant.
Yeah.
other than that,
Yeah. Yeah, just a super notable trend. I mean, when I posted that series on Baylor over the past couple of weeks, and when I talked to Pete, he was saying provider sponsored plans by default are subscale and you're competing against, national plans or, better scaled. It's not necessarily your core competency and, market dynamics come into play and all that kind of stuff. So I just think that the whole dynamic is interesting in the context of, you talk about health system transformation. Do they have a role to play or not? I don't know. So anyway,
Wait, isn't one of Longitude's pillars to help improve the hospital sponsored or hospital affiliated plans? I'm like, isn't that interesting that like Novant, which is one of the sponsors of Longitude is like selling off the plan, given like Longitude's supposed to be coming in to solve lots
Yeah,
of problems.
Jeff, that's a really good point. I didn't even think about or connect the dots that Navant is connected to Longitude, but but they're selling the plan. That's interesting. So maybe I don't know, maybe they're doing something else or whatever it is. I don't know, but yeah. So to your point, Longitude, one of their pillars is population health and like value-based care. And when I initially talked to them, they were really gung ho about believing very what's the right word, like having a strong thesis in specialty value-based care as like that being kind of the forward mantra of driving down total cost of care or whatever it looks like. And since then, I think it's maybe morphed a little bit because based on what they launched, I think it was called like Longitude PHM. And you can go to like Longitude Health's website and see their initiatives and what they're focused on. But it's called Longitude PHM. And I want to say they're trying to solve for that problem, like that provider sponsored plan and population health, like subscale problem when it comes to health systems, like incubate these more kind of scaled national products within these large health systems and then sell them to other provider sponsored plans to help them with kind of data capabilities or whatever those kinds of resources look like. And honestly, that doesn't sound too dissimilar from what Risent is trying to do too, like Kaiser selling those services to those organizations. So it sounds like people are maybe having parallel or similar ideas in that space. Again, I'm not an expert there, but just trying to like connect dots, right? Okay, cool. Well, I think that's kind of, most of the conversation around MA stuff. If you guys have any other thoughts, feel free to chime in. But the other thing that I think has been just going on in general that everybody is probably painfully aware of in their 401ks and otherwise is just the, market crash going on, just the tariffs debacle and just a lot of volatility, it seems, in general. I think technically we're in a bear market. I'm not sure. Like it's like a 20% drop is considered a bear market. But that's, obviously had a huge impact on the economy and businesses. Valuations drop, hospital mark-to-market investments drop. So you're going to see probably some Q1, Q2 health system headlines of, oh, net income fell by 100%, which is scary because it affects balance sheets, right? And that affects ratings agencies and ability to raise money, those sorts of things. But it's not like cash, if that makes sense. The other thing that's interesting is just kind of on more of the startup or health tech or tech in general IPO side of the equation is not only Hinge Health, which they were planning to go public, but several other kind of, fintech. I think like Klarna was another one, and then a couple other names. Because of all the volatility, which makes sense, they've delayed their filings. So looks like we won't be seeing Hinge Health on the market for a while, at least for the short term, which I don't necessarily agree with. I feel like their value prop, I understand from like a valuation perspective and stuff, but like their value prop is, hey, we save employers money, right? And we're in healthcare, so we have a lot of visibility into like our revenue. It's very stable, and then those sorts of things. So I'm kind of the opinion they should just go public, and you can't necessarily like time the market. Like none of us are able to perfectly buy a stock. So it's just like I feel like there's more human behavior based things holding them back than actual, which I get. There's a lot of money on the table, but would be curious if anybody else has thoughts in that realm.
Yeah, I had a call with an investor yesterday, and I won't say which company, but it's a massive health tech company everyone's following, and they were thinking about IPOing, and they said they're holding off till at least next year because of
Wow.
market. So
A whole year. Okay.
yeah, they're like, it won't happen for at least a year now. I was like, okay.
And Blake, I think you're right. I mean, Hinge has got a very healthy business, but it's just the macro view of it, right? Having gone through an IPO before, like even in the best of times, it's like, it's still hard to go out there and do that. And so, I think yes, I think we'd love to have something in the health tech space go out there and start to kind of break through some of this IPO glass ceiling we've had for a little bit. But also from their perspective, I get it, right? They don't want to go out there and completely flop. It's hard to recover from that. So I think that's something that it's probably smart on their end, even though selfishly I'd love to see it go.
Yeah. And Dan, I I apologize. I know we talked recently, but I don't think I let you introduce yourself. This is your first time on, right?
It is. I'm just lurking in the background listening. So
Go ahead.
yeah, so I've in this health tech startup space, was Allscripts for a long time, then employee 13 at Livongo, built that to the IPO, and then COO at Carum Health, so two-sided marketplace, and now CEO at Reimagine Care, so a cancer focused company. So we built an on-demand cancer care platform for health systems. So I believe someone had mentioned they've got some connections at Hartford Health earlier on the call. I would love to maybe follow up offline. That's a group we'd love to start talking to. We kind of had some outreach there and haven't had a whole lot of traction, but just announced MedStar. We've got Moffitt, Save Hope, et cetera. So really more on the moved out of the employer focus for the last two companies and now more provider focus, building out a network across the country of oncology clinics. So
Here, Dan, you can get in touch with me. We also have a real close relationship with McKesson because we represented a number of oncology groups that have sold to them. So
awesome. McKesson's an investor in us, so we have a shared connection there. Michelle Snyder's board observer. So yeah, that sounds great. If you wouldn't mind, just through the chat, send me your email, or I can get it from Blake afterwards. But would love to follow up.
Yeah, I was gonna say, happy to just intro y'all right after this.
Oh, cool. Thank you.
So yeah, that works. Or either way, whatever. Cool. Thanks, Dan, and thanks for being on. Appreciate your perspective. So, that's awesome. Okay. I have a bunch of other odds and ends here. If anybody else has anything they just want to talk about, feel free to chime in. But otherwise, all of the kind of fee for service rate updates are coming out for CMS. So we saw the final rate notice for Medicare Advantage, obviously 5%, and then as far as kind of proposed updates for all of the other kind of service lines in healthcare, all are around 2 to 3%, which is generally pretty normal. I would say mid twos is kind of on the lower end probably, but as you know, you can probably guess most of the hospitals, the AHA, et cetera, are saying, hey, this is not adequate for inflation and all the other effects going on. So that's kind of an ongoing thing. So we'll see if any of these numbers change, but typically they don't change much. It's always around 2 to 3%. That's what you could get. You make it up on the volume side, you make it up on the efficiency side, you ask your employers in your market for more money, that sort of thing. As far as all the the slew of government and policy updates, usually I rely on Jim for these, but he's not on today, so I'll have to take my best stab at it. Obviously, there's been a ton of changes with all the kind of efficiency stuff and NIH funding. I think HHS announced a reorganization. They're consolidating and centralizing down to like 5 offices from 15, something like that, and cutting 10,000 jobs, 2,500 of which in the FDA. And I'm seeing it's hard for me to know like what's real and what's not. I mean, I'm seeing a ton of headlines around like, hey, this is causing so much turmoil and volatility. So I hope that's not the case. And I hope, everybody who needs to be there is still there and those sorts of things. But at the same time, I can't help but not feel alarmed about, a ton of volatility, especially in healthcare and in the policy and kind of reimbursement realm and CMS and those sorts of things. So I guess that's just, something everyone's just going to have to deal with. And I'm sure strategy folks are getting, every last cent they're earning, trying to plan for all of these contingencies. The other interesting thing I saw, so Dr. Oz was confirmed, which I'm sure all of you know. The other interesting thing I thought I saw from Healthcare Inc., which is Stats newsletter on kind of the business of healthcare, is um, the Trump administration released a proposal for kind of ACA enrollment, and basically they put in that proposal, hey, with kind of our plans for next year, we expect to see a cut of 750K to 2 million folks, which would amount to about 17 billion drop in spending in the ACA market. So in general, I would expect to see, some shrinkage in exchange kind of footprint, and where they go, I guess it remains to be seen, Medicaid or commercial or whatever that looks like. So yeah, I think I just, rapid fired through a couple things there. And anything kind of interesting from y'all's perspective that catches your eye, or any further kind of commentary you guys have think about?
One thing we've been following, we do a lot of work in the Medicaid space. Also, HHS is turmoil. Like we have a lot of folks on the inside there, and it's absolutely chaotic. But CMS, told states last week that they're not approving, future federal funding matches for the state designated state health programs and the state investment programs. And they're cutting a lot of funding for non-medical services like transportation and food, like things that we know absolutely have impact on health outcomes, but they just don't want to fund it anymore. Um, it's hurting a lot of our work that we're doing and efforts that we're doing, but I'm just curious if anyone else has any perspective there, is tracking that, or has any take on what that's actually going to look like when the future funding gets cut.
Well, when you look at what's going on with hospitals right now around the country, Medicaid's paying about 70 cents on the dollar of cost. And it's the only way to survive is cost shifting. And what's happening is at the state level, like Oregon created the state health plan for teachers and government workers, and is capping payments to hospitals at 200% of Medicare. And then North Carolina, as I mentioned, just passed something. The states are really getting very active at capping reimbursement for health systems. So the whole concept of covering Medicaid using commercial insurance companies is going to be problematic over time.
Interesting.
What's the good news?
I don't know. I mean, I know a lot of rural hospitals are we're going to go out of business if these Medicaid funds get cut the way that they're talking about. And I just don't know what that looks like I think people will actually die from that. And I don't know what the solution is beyond not cutting the funds. I think it's also squeezing. My perspective is I spent a lot of time at SDOH conferences recently. It's squeezing the community-based organizations, nonprofits in the area to basically become healthcare providers. And I don't know where they're going to get their funding from with the market looking the way that it is, because all these health plans are trying to push down onto the CPOs to start providing more and more services. And I just don't know how they're going to actually do it in these rural areas.
Yeah, the rural hospitals are finished. I don't know, Drew, you might be disturbed by it. I don't know if he's still there, but
I think it might have dropped.
what the data shows that the reason rural hospitals are failing is because the infrastructure costs are the same. I mean, you have to have an ED and you have to have a doctor in it and nurses in it, and yet they don't have the negotiating cloud to deal with the payers. And then MA is paying them 20% less than Medicare, and the numbers just don't work. And less doctors want to go into rural markets. So there's a bunch of stuff going on to try to deal with that, but none of it's going to work. I mean, the math just doesn't work for rural healthcare.
Yeah, I agree. We have 23 clinics around the state of Georgia, and more than half are going to be in rural Georgia. 60% of our patients are Medicaid. They cut Medicaid cuts. We're not going to be able to cost shift enough to the commercial payers to keep those clinics open. So we're going to have to close clinics in rural Georgia to take care of kids because of the Medicaid cuts. So it's not something that, I want to do, but we have to run the organization.
Yeah, it's really disheartening to hear. That makes me sad. Denver, do you have any good news for us?
No, I have no good news for you because I think with the Medicare Advantage issue that the commercial payers are having, as highlighted by the United Health Group, we have now one of our biggest commercial payers is now trying to come after us for a reduction significantly in the amount of reimbursement. So again, it's the way it works in pediatrics because so much is Medicaid. We have to cost shift to commercial payers. So if we get cut in Medicaid and by our biggest commercial payer, again, what does that do to access? That makes us close down facilities. So I have no good news for that.
Gosh, yeah, that's really unfortunate.
Do you have enough market like coverage that United has to keep you from a network adequacy perspective?
Yeah, I mean, we're just starting the negotiations now with folks to kind of say, this is what's going to happen. This is the reality of what happens when you cut. So I'm hoping they'll move on to some adult hospitals that have more ability, because again, Medicaid doesn't pay cost, and we lose money in these clinics. We do it because it's part of our mission, but they can only go so far.
So one of the things that changed is like Scripps right now is out of network with Anthem since January 1, and Scripps has probably 30% market share in San Diego. It's the premier health system, and Anthem just doesn't care. And now, especially with the cost, and United has always been like that. Now they're going to be worse. So instead of being out for 6 weeks, these payers are planning to be out for 6 months. Now they're still collecting premium, so they're okay, but what I heard yesterday was for a new patient to go to see a primary care physician outside the Scripps system, the wait is 9 months. And that's because Anthem's is out of network with Scripps. So it's just a complete mess right now.
Wow.
Yeah.
Yeah, Blue Cross went out of network with UT Southwestern for a hot minute, and then it was like, hit the media wire and got resolved very quickly. But
That's different. That's Script Pilgrim. That's a different Blue Cross than
yeah,
Yeah.
yeah, it's just interesting. Nonetheless, well, that's unfortunate news. Hopefully, there's hopefully we see some positive things come out of that realm. Kristen, Denver, keep us updated on just kind of how those things are going, what you guys are talking about and seeing, because I'm interested in that. Okay, so just some other kind of interesting little tidbits and odds and ends to end the session today. This has been going on for a while, but I just think it's still an interesting dynamic as far as the 23andMe bankruptcy. I can't remember her name, Anne Lamont, or the founder. She's trying to kind of recover it out of bankruptcy and resigned to get in a better position to do that. But it still brings into question like all of this personal genomic data like is an asset to be acquired, right? So lots of kind of just privacy implications with that, and I'm personally glad I never did 23andMe. But just just an interesting trend going on, like just because I actually I've been following this story a little bit, and then somebody DM'd me and said, yeah, she's actually a really passionate founder and cares a lot about her company, and actually went through a lot of like personal struggles over the past like year or 2 year or something like that with somebody committing suicide in her family and those sorts of things. So it's just like quite the battle, a lot going on organizationally and personally for her. So that's tough, but in general, just an interesting storyline. Another thing that's really just, I don't know if alarming is the right word, but just very, very notable. In Denver, you might be more kind of attuned to this, but just kind of like the rising rates in autism. I think it's down to like 1 in 30 or 1 in 20 or something like that. And that has risen quite a bit over the past 10 years or so. And my wife's a speech therapist, so she works a lot with kids with autism in the pediatric space. But Denver, what's kind of driving that? Like, is there anything like, do you know anything about kind of what's going on there?
It's certainly not my area of expertise. I'm a pediatric cardiologist. That's not my area for sure. But I mean, I think there's lots of things that are probably contributing to it. You know, you can just look at the rates of maternal health, how they worsened over time, right? So you have higher rates of maternal obesity and hypertension and things like that. And all that's got to affect the developing brain. You know, I mean, I'm not an expert on any of these things, environmental toxins, but you know, microplastics are in the umbilical cord at time of birth. So it doesn't need anything. They already have plastic in their developing brain. So I think there's lots of factors that are probably hard to tease out what's causing it, but it's just maternal health plus environmental exposures. I'm sure that's part of it. The other thing is, you know, you probably also people are more attuned how to diagnose it, so that certainly comes into play somewhat as well.
From personal experience, my husband got diagnosed like 5 years ago, and he was in IEP as a kid and struggled, and like nobody knew what it really was, and nobody paid attention enough to like give him a diagnosis. And so it took him until he was 35 years old to get diagnosed. And, you know, now we know how to test. I have a 3-year-old son. They know how to look for things and test for him. But I mean, there was none of that back when my husband was a child. And so maybe there was, not in his community for sure. And so I think I think definitely what, you know, Denver, you just said. And I think it's also just like awareness, right? Like we didn't talk about depression and anxiety 30 years ago. I guarantee you my grandmother had that, but that was never an ICD for 9 code for her because she wasn't going to talk about it with their doctor. So I think it's also just like awareness and people's interest in having a diagnosis and then being able to get support from it. A lot of the times, especially if you're a child, like I live in Florida, if you have the diagnosis, then you get a lot of access to care and support that you don't have without it. And so I think parents also seek it so that they can get that additional support.
I think it's fluoride.
You think it's fluoride?
I have a kid who had to do fluoride every Wednesday at her Catholic school. I am terrified to find out what the research ends up being on that. But
Oh my gosh. I don't even want to open up that can of worms.
I thought it's
Um,
ultrasounds. That was the most recent one I heard. Ultrasounds are causing it.
Seems like there's something new every week.
Yeah.
But yeah, to your point, Kristen, the depression and anxiety is a great parallel. And then also, I would just be curious to know, as far as the new kind of rate upticks and new diagnoses, like where do they fall on kind of like the severity spectrum? Like, are these people very severe, or is it just like, you know, they're right on the edge and it's like, oh, you can get more insurance coverage by, you know, being diagnosed or whatever it is. Not that that's like necessarily happening, but I do agree with kind of, you know, awareness and all those sorts of things. But nonetheless, the granola moms are all over that trend. Or what? Crunchy? Is crunchy the right word? Granola? One of the two. I don't know. But yeah, anyway, just another interesting thing. Yeah, these last few, not necessarily like super core trends or anything, but still interesting nonetheless. Things that I've just noticed recently. There was a piece in Modern Healthcare maybe a week or a couple weeks ago around just this growing micro hospital trend where hospitals just build smaller hospitals in, I mean, basically like a, you know, an access point, but it's got everything. And it's like, I think the main strategy here is like, hey, we can put these in neighborhoods or close to affluent areas. Like I know from my experience in Dallas personally, you know, Frisco and North Texas is growing like a weed because of all of these, you know, Toyota and everyone coming in. And I noticed like THR built a micro hospital out in that area, you know, those sorts of things. So um, I know it's like a trend health system folks are paying attention to and thinking about. Um, Fun fact on that, actually, when what's the name of it? Adeptus, the ER company, went bankrupt. They were trying to do a micro hospital strategy in Colorado, and they ended up not being able to get it certified with Medicare because Medicare was like, "Hey, we know what you're doing. You're purposely going out of network. We're not going to certify your facility." So that's kind of a fun little fact back from my day in doing healthcare valuation. We knew that Adeptus was going to go bankrupt before anyone else. um, so
That's
fact.
my pet peeve with modern healthcare is and I guess there's a new publisher or editor, is that they just present stuff without getting contrarian perspectives. I mean, who needs a micro hospital? I mean, you if you're going to go in the hospital, you're going to have major surgery, or you're going to be in an ICU or some sort of monitored bed. Other than that, you're outpatient. So I haven't figured out why anybody would need one of those things.
That's a really good point. I think that seems like modern healthcare knows their core audience, right? So they're trying to sell their sponsorships, and I wonder if contrarian perspectives would hurt that. But to your point, that would be good to, shape arguments. But yeah, no, you're right. Micro hospitals, like, you ask yourself, like, what's the point of a hospital, right? And yeah, like, you might as well just set up a freestanding ED in that case, right? Like, what's the anyway? Yeah, and then these last two are just continuations of trends that have been ongoing. So the compounders getting sued. I think most people would probably have seen, Hims and Hers stock price is in free fall because they've been capitalizing on the obesity segment and compounding drugs, and all of a sudden they're saying, hey, we can't offer it anymore, and oh, by the way, now we can offer Zepbound, but it's $1,900 a month or whatever they're saying it is. And everyone's like, where did that number come from? Isn't the cash price like 500 or something? So that's crazy. And so all of that distribution is going to happen through the Eli Lilly and Novo, and kind of that direct to consumer pharmacy chain. And I think Knownwell was a recent name that partnered with Lilly, and all these companies, all these direct to consumer companies are now partnering with them to be channel partners through, and they're kind of controlling the spice, so to speak. And then finally, just there was a really interesting Wall Street Journal article on just longevity and how it's, I mean, similar to going to a fancy gym or just anything in life, just wanting to be a social climber and paying out the wazoo to be part of these longevity clinics, $100K a year or whatever it is, med spas, all these sorts of things. So in my opinion, that's kind of like a signal that we're in kind of peak longevity hype hysteria, so to speak. And I think like there's a lot of good that's come out of longevity and like kind of that space and empowering consumers. But you get to a certain point, it's like, hey, this is oversaturated, it's overdone. There's more money being spent than good being done potentially. But hey, people want to spend money on it.
Feels like we're continuing to like widen the gap between like privileged and non-privileged people in terms of like what their health outcomes are going to be. Which I get it. If you have $100K a year to spend on your health, like go for it. But it just like, I'm not against, if you have the money and you want to do it. But I'm interested to see. I think it's just going to further prove the point of like money, how much money you have is highly correlative to what your health looks like.
Yeah, no, I think that's a great point. And then same thing with kind of concierge primary care, or like direct primary care, like these PCPs going out of network or not going out of network, but like starting your own
I
practice.
use direct primary care because my United network here is garbage and I pay way too much for insurance. I do it in case my son needs a hospital visit, but I do it myself because no one's in network here that I want to go to.
Right. No,
I think everybody that can afford it should get a concierge doctor. I mean, it's showed when you're sick, they tell you to go to urgent care or the ED because they don't have capacity. So I tell everybody to do that.
There you go. Yeah, I mean, definitely something that's continuing to play out, like that disparity, Kristen, to your point. But yeah, we're right at time. It's 1:01 where I'm at. So thanks everyone for the discussion today. I think this is one of our better ones. We'll be back next month. And next month, the first part, we're trying a slightly new format where maybe the first like 10 to 15 to 20 minutes, we'll have kind of like a guest come on and like they'll talk about, you know, a trending topic or like a subject matter expert kind of thing. And so next month we'll have the folks from Longitude Health come on and talk about kind of like what they're doing and their mission and what they're investing in and seeing and those sorts of things. So excited for that. But otherwise, you guys have a great rest of your day and have a good weekend.